Ladies and gentlemen, welcome and thank you for joining today's Ferc 831 pre-market sim training. Before we begin, please ensure that you have opened the WebEx participant and chat panels by using the associated icons located at the bottom right-hand side of your screen. Please note all audio connections are currently muted and this conference is being recorded. You are welcome to submit written questions throughout the webinar, which will be addressed at the Q&A sessions of the webinar. To submit a written question, select Everyone from the drop-down menu in the chat panel, then enter your question in the message box provided and send. If you require technical assistance, please send a chat to the event producer. With that, I will turn the webinar over to Cynthia Hinman. Cynthia, please go ahead.
Thank you, Michelle. Well, welcome to today's training regarding the Ferc Order 831 enhancements. And I am Cynthia Hinman, as Michelle said, and I'm going to guide you through today's training. I have a group of subject matter experts with me as well to answer your questions. So this is the second in our summer release training sessions that we are providing throughout the pre-market sim time frame. And the slides are posted. We put a little link there in the chat. The slides for this are already posted. And once we get the video back, we're going to post that on our website as well in the same location. As Michelle said, you can always ask a question in the chat, or when we stop for questions, you can call in to verbally ask your question. So with that, I'm going to get started here. So today in our training, we're going to talk about some background about Ferc Order 831. There was a lot of activity on this particular initiative at various time frames, and we're going to sort it all out and tell you what happened when and what's going on going forward. We'll talk about the offer cap details, the maximum import bid price, and penalty price enhancements. It's been kind of a windy path, but we're going to get to our last Ferc 831 initiative here in June. I also have acronyms here. If you had the presentation printed out previously, you can refer to those as we go through the presentation. I'll make every effort to speak any acronyms that happen to be on the slides, but if I forgot, you have them here. So there's another slide here. All right, so let's just give a high-level overview of the history of Ferc 831 implementation. So back in February, Ferc files an emergency provision with California ISO files an emergency provision with Ferc to allow after-the-fact cost recovery on incremental energy costs above $1,000 bid cap. So that was done as an emergency measure, and I'll show you a little bit more about that in the next slides. Then on March 20th, the ISO implemented Ferc Order 831 Phase 1 compliance provisions. Those were actually that was actually the filing that complied with the Ferc order. Scheduled for June 15th of this year, the ISO plans to implement the enhancements or Phase 2 provisions, and that's where we're going to spend the bulk of our time discussing today. So let's just take one more look at that emergency Ferc order that came in February on the 17th. So it was filed in response to extreme weather conditions and ensuing high natural gas prices during mid-February of this year, and it allowed scheduling coordinators to submit fuel or fuel equivalent costs to the ISO if their incremental energy costs exceeded $1,000 per megawatt hour. So that was just an emergency initiative that we put out there because we need that. Ferc Order 831 compliance, that's what we're calling Phase 1, and it was effective on March 20th of this year, and it had a couple of changes. It complied with the Ferc order by raising the energy bid cap, the hard energy bid cap, to $2,000 per megawatt hour. The market penalty parameters are also scaled as applicable based on that new hard energy bid cap. We also implemented a soft energy bid cap of $1,000 per megawatt hour and implemented a minimum load cost hard cap of $2,000 per megawatt hour. There was after-the-fact cost recovery for eligible energy bids above that hard energy bid cap and eligible minimum load bids above their minimum load cost hard cap. So that's where we are today, because it was implemented on March 20th, and so that we're in the midst of that right now. This slide just talks about the tariff language in case you're wondering exactly what we mean by hard energy bid cap, soft energy bid cap, and minimum load cost hard cap. So the hard energy bid cap is the maximum energy bid price the ISO will use for purposes of clearing the market. The hard energy bid cap is $2,000 per megawatt hour. The soft energy bid cap is the maximum energy bid price submitted by scheduling coordinators for resources except virtual bids, bids for non-resource, and bids for non-resource specific system resources. The ISO will use for purposes of clearing the ISO market processes without cost verification pursuant to Section 30.11 of the tariff. The soft energy bid cap is $1,000 per megawatt hour. The minimum load cost hard cap is the maximum minimum load cost used in the ISO markets. The minimum load cost hard cap is $2,000 per megawatt hour, calculated as the resource's minimum load cost divided by its minimum load, or PMIN. So the details of Phase 1, where we are now, we'll start with the offer cap details. And we're going to talk about all the different types of resources and how this order applies to them. So intertie resources, non-participating load, and virtual supply and demand bids can bid up to $2,000 per megawatt hour with no justification required. NGRs, or non-generating resources, can bid up to $1,000. Resource-specific resources can bid up to $1,000 per megawatt hour without justification at any time. Bids that are submitted above $1,000 will be reduced to the maximum of $1,000 per megawatt hour, to the maximum of $1,000 per megawatt hour, and the resources DEB, or default energy bid, as modified by a reference level change request. So it's going to be reduced to the maximum of $1,000 per megawatt hour and the resources DEB. To modify your default energy bid, these resources can submit an automated DEB adjustment via Cyber or a manual reference level change request via CITI. Also in Phase 1, the market penalty parameters. New market parameter values for the integrated forward market, residual unit commitment, and real time. They're for both the scheduling run values and the pricing run values. They are both based on the $2,000 per megawatt cap. Other penalty prices are scaled based on the $2,000 per megawatt hour cap. And if you want to see more about the different penalty parameters, you can look in Section 6.6.5 of the Market Operations BPM. With regard to the after-the-fact cost recovery, you can submit the fuel equivalent costs, and that's a process that's similar to what we already have for CCW. If you want to see how that's more information about that, you can look at the Market Instruments BPM Attachment 0.3. Costs that exceed the hard energy bid cap or minimum load cost hard cap are eligible for after-the-fact cost recovery if the SC can provide supporting documentation of costs above those values. Once the updated costs have been received and approved, the ISO will include those costs, and the revised cost amounts will be included in the next possible settlement statement. There's not any new charge code or changes to existing charge code configurations to achieve this. If there is a change to the minimum load cost, it will impact bid cost recovery settlements, and if there's a change to the energy bid, it will impact bid cost recovery and exceptional dispatch settlements. So here I am going to stop and see if there are any questions about Phase 1. So next we're going to talk about Phase 2, which includes the enhancements for mid-June. So Michelle, if we can see if there are any questions about Phase 1, I'd appreciate it.
Absolutely. So ladies and gentlemen, if you would like to ask a question via phone, please press #2 on your telephone keypad to enter the question queue. Once again, pressing #2 will enter you into the verbal question queue. And we do have a question in queue. Caller, your line is unmuted. You may ask your question.
Hi, it's Dave Francis, DTE Energy. So just looking at what you went through, you're saying the current hard energy cap is the $2,000?
Yes.
And that's effective when?
That was effective March 20th.
Is there a March 20th tariff update available?
Katie or Danielle, can you help with that?
The website has the Feb 17 as the current conform tariff update.
Yeah, hi, this is Katie Wickler with ISO. I can take that question. I think we're still working on getting the actual tariff section updated on our website. If you want to refer to the tariff language that was made effective as of March 20th, you can refer to the transmittal letter that we filed with Ferc for the initial, Ferc 831 compliance filings. I think we can provide that link to you if you don't have that accessible.
I'm concerned that if it's in effect, and it's been in effect since, did you say March? But it's not posted as the part of the conform tariff that's published on the public website. Also, it doesn't seem that the cyber rule bid set most recent document has the 2,000 hard cap in it either. I'm just trying to express that it's very difficult for market participants to keep up with the rules if they're not consolidated, publicly posted when they're in fact, in effect. Thanks.
Okay, thank you.
All right.
Michelle, other questions?
Yeah, I didn't see any additional questions in the queue at the moment. But once again, ladies and gentlemen, #2 will enter you into the verbal question queue. All right, I don't see any additional questions at this time.
All right, I do see that there is a question on the phone, and I'm going to ask Katie for some help on this. It says, how do you reconcile the deadline for submitting the energy adjustment curves to cyber at the deadline and the fact that a generator does not know their cost at that time in the morning? I don't know if that's a training question, but perhaps we can address that.
Yeah, sure. This is Katie Wickler again with the ISO. I can take that one. Thanks, Dave, for your question. I think you're asking about the functionality and the timing that was sort of implemented as part of the CCW proceeding back in February. The timelines that we've developed for that process really are trying to take into consideration the timelines that we have to work around for specifically the day-ahead market. So we have some pretty pretty tight internal timelines that we need to conform to for various calculations and processing prior to the running of the day-ahead market. So the timelines that we've established for that really do try and take into account those timelines and the fact that folks are going to be trying to procure their gas at that time of the morning. I hope that helps answer your question.
Thanks, Katie. All right. It doesn't look like there's any other questions in the chat, so I am going to continue on. There'll be other opportunities for questions, obviously. All right, FERC Order 831 enhancements, which is phase 2, and this is what we're going to spend the rest of our time talking about. The proposed effective date for that is the middle of June, June 15th, 2021. Key points here is that it takes it rounds out the rules for the FERC order that we implemented, and it implements various sets of market penalty parameters that will be effective depending on market conditions, and we'll talk about those market conditions. And it implements price screening methodology for virtual bids, demand bids, and non-resource specific system resources, including imports and exports. There are bids that are more than $1,000 per megawatt hour, because those things were not covered in the initial FERC order that we complied with. It establishes the maximum import bid price, which is MIBP, and differentiation between RA and non-RA, non-resource specific system resource import bids. So we'll get into detail on those as well. So let's start with talking about the offer cap details. So I'm going to, again, go over some examples for each type of resource, and we're going to talk about them with whether they're routine conditions or in high price conditions. So we'll talk about all different types of resources, and then I'm going to stop for questions again so we can talk about that. So for the purposes of the next few slides, we're going to use the following definitions. Routine conditions refers to the ISO calculated maximum import bid price has not exceeded $1,000 for any hour, and there are no cost verified bids greater than $1,000 for any hour. So it's routine, like every day. And after we go through this, we're going to talk about how the maximum import bid price is calculated and what it is. So just stay tuned for that. Now, high price conditions refers to the ISO calculated maximum import bid price has exceeded $1,000 for at least 1 hour, and or there is at least one cost verified bid greater than $1,000 per megawatt hour for any hour. So given that, let's go through some more details. We'll start out with the non-resource specific RA imports. During routine conditions, these resources can bid up to $1,000 per megawatt hour. In high price conditions, CYBR will reduce NRS RA import bids to the higher of $1,000 per megawatt hour to the greater of the MIBP or the highest price cost verified bid. For non-resource specific non-RA system resources, imports and exports, and virtual bids and demand, routine conditions, these resources can bid up to $1,000 per megawatt hour, and in high price condition, these resources can bid up to $2,000 per megawatt hour. Oops. Non-generating resources, or NGRs. During routine conditions, these resources can bid up to $1,000, and in high price conditions, again, their limit is $1,000 per megawatt hour. Resource-specific generating resources at any time, these resources can submit bids up to $1,000 and up to $2,000. If they submit bids up to $1,000, they will be reduced to the maximum of $1,000 and the resources DEB as modified by a reference level change request. And there's no changes to that after the fact cost recovery process. It's still the same way you're doing that now. so before I go on to the maximum import bid price, I am going to stop for questions. So, Michelle, can we open it up for questions again?
Absolutely. Ladies and gentlemen, once again, if you would like to ask a question via phone, please press #2 on your telephone keypad to enter the question queue. I do see one question in queue. Caller, your line is unmuted. You may ask your question.
Hi, this is Callie Wells with WPTF. I had a quick question on the bidding for NGRs. So they can't bid up to $2,000 under high price conditions like all the other resources?
Yes. Katie, can you confirm that? That is true.
Yeah, sure. Hi there. This is Katie Wickler. We have some provisions in our tariff basically restricting us, for resources that we don't calculate default energy bids for. That's kind of how we've structured the energy offer cap. For NGRs, we don't currently have a construct to calculate a default energy bid for them, and so they're subject to that $1,000 energy offer cap.
Okay, because you're saying they can't submit the reference level change request?
Correct. Yeah. So the sort of construct of, submitting a reference level change request is really predicated on the resource having a default energy bid and a DEB and underlying commitment costs to sort of base that reference level change request against.
Okay. So then my second question is there, are you guys going to be updating the tariff, or will it automatically be updated once the ESDR 4 goes into place, which does create a DEB for NGRs?
Right. So when ESDR 4 becomes in place, we will have the opportunity to offer a DEB for storage, certain resources, including storage resources. And so at that point, those resources would sort of fall under the tariff provisions for, resource-specific resources. So I don't think we'll plan to update the tariff language specifically to discuss NGRs. They would just kind of fall under that category.
Okay, that's helpful. I was going back to the tariff filing for this and was trying to figure out where this specific element was noted, but it's predicated on the DEB element. So, okay, I appreciate it. Thanks.
Sure.
All right, once again, ladies and gentlemen, #2 will enter you into the question queue. And at this time, I do not see any additional questions in queue.
Okay. I see a couple of questions in the chat, and Jason asks, is it and or? And I believe you're talking about, I remember where I said, on the high price conditions. It says ISO calculated maximum import bid price has exceeded $1,000 for at least 1 hour and or there is at least one cost verified bid greater than $1,000 per any hour. Katie, is that an and or an or?
Yeah, I guess technically could, either one of those conditions could sort of trigger the high price condition. So we could see both of those occurring, or we could see just one of those, the import bid price above $1,000 or a cost verified bid above $1,000.
All right, so that's an or. So that answers that question. And then the second question is David Redding. He's reiterating his question. After all you just covered, I still have the same question about the reconciling the deadline for submitting the energy adjustment curve to cyber and the deadline knowing, and the fact that a generator does not know the cost at that time in the morning. Do you have anything to add to that, given what we responded to, what was presented?
Right. I would say that the answer still remains the same, David. We're still considering our sort of internal calculation timelines with that deadline. We do see that there is trading sort of in the morning around that time. We would expect that there would sort of be some idea of the cost at that time, around our deadlines. But, that's not going to change. We're still conforming to the same deadlines that we've proposed through our CCW initiative.
Okay. Thank you, Katie. Thank you, David, and everyone else who's asked questions. I'm going to move on to the maximum import bid price, and then we'll stop again for questions. So, why is the maximum import bid price used? And it's used to screen the cost of non-resource specific import bids over $1,000, and it's also used as one factor to determine how market pricing parameters will be scaled. So we're going to go through an example of how it's calculated and then give you an example of how it's used. So the calculation for the maximum import bid price looks like this. It's the energy electric hub price times the hourly energy price shaping factor times 1.1. So the electric hub price is the maximum of Mid-Columbia or Palo Verde day-ahead bilateral electric prices, and the hourly energy shaping factor is this formula here. It's 1 plus the hourly day-ahead system marginal cost of energy minus the average day-ahead system marginal cost of energy, and we do that both for on-peak and off-peak. And then we divide that by the average day-ahead system marginal cost of energy. And again, we're going to go through an example, so you'll see what we're talking about. So as we mentioned, the first step is to source the electric hub prices, and we're going to use Mid-Columbia and Palo Verde. And today, in this example, we're going to use September 25th of 2020. So we have the Mid-Columbia on-peak and off-peak prices and the Palo Verde on-peak and off-peak prices. The ISO is going to use the highest bilateral hub price for each peak and off-peak period from either Mid-Columbia or Palo Verde. So the peak and off-peak highest prices are Mid-Columbia's peak price of $150 per megawatt hour, and Palo Verde has the off-peak price of $90 per megawatt hour. So in our example for September 25th, we're going to be using these prices as the electric hub price in our calculation. Next, we're going to apply some look-back implementation logic to find the most recent high-priced day. So we're going to start at the 25th, and we're going to look back each day until we find the most recent high-priced day where the day-ahead system marginal cost of energy was above $200 for at least 1 hour. In our example, the calculation is being performed in the summer season, and I have the summer season is the seasons listed below, and the most recent high-price day in our example was September 15th. In hour 19 of September 15th, the day-ahead system marginal cost of energy was $215 per megawatt hour. So you can see here's September 15th, and I have all the hours of the day and the cost of energy for each one of those hours. So now we need to calculate the average day-ahead system marginal cost of energy for the peak and off-peak hours for the high-price days, and I have the hours listed there that are peak and off-peak. And in this example, the off-peak average system marginal cost of energy comes to $36.29 per megawatt hour, and the on-peak comes to $58.47 per megawatt hour. So we used, going back a slide, we're using these hours, these system marginal cost of energy based on whether they were on-peak and off-peak, and came up with these average prices. The next step is that we need to calculate the hourly energy price shaping factor for September 25th. Now we do that for all 24 hours of the day, but in this example, I'm just using the last 13 through 24, just to give you an example of how it works. So what we're going to do is, you can see we have all the different hours in the first column, whether it's on-peak or off-peak, the day-ahead system marginal cost of energy for that particular day for each one of those hours, time, and then the shaping factor. And so the way that we came up with that was looking at the formula the hourly day ahead, the first component, the hourly day ahead system marginal cost of energy is what you see in that third column over there. And then the day ahead average system marginal cost of energy for on-peak and off-peak, we figured out in the previous step. So that was, these are the average costs here. And so now you have all your factors to determine the shaping factor, which is our last column in this chart. We're going to use that shaping factor to help determine the the maximum import bid price. So now here's where we take, again, I'm just using hours 13 through 24, and we have the shaping factor times that hub price. Remember, that was Palo Verde or Mid-Columbia, and apply the hub price, and we come up with the maximum import bid price. You can see the formula over on the right. We take the shaping factor times the hub price times 1.1. So now that we have this maximum import bid price, what are we going to do with it? So I'm going to give you one example, and then I'll tell you where you can find more examples. So if we just look at hour 19 and 20, we have the day ahead maximum import bid price. I don't think I explicitly said it was the day ahead in this example, but let's say it is. Taken from the last slide of $1,128.77 for hour 19, and for hour 20 it's $1,072.33. So let's say in this example that there was no cost verified bid over $1,000 in the day ahead for either of these hours. Then we look at real time. And in real time, the maximum import bid price was $800 and $900. I didn't show you the calculations for that, and frankly, just put some numbers in there. But let's just say also in real time, there was no cost verified bid over $1,000 either. So if we have a situation like that, the result would be that the energy offer cap would be raised to $2,000 in the day ahead and real time market for both day ahead and real time. And Cyber would display a notification of the new bid cap for these hours. Now, there are a number of examples that get into a lot of detail about all the different possibilities here, if we have cost verified bids, yes or no, and the maximum import bid price. And you'll find those if you look in the BRS. You'll find a section regarding cyber logic. It's one of the appendices at the end, and it has all these examples written out. So I suggest that you look at that. Also, we're going to be doing some market simulation training in a few weeks, and we'll be talking more about how this works out in more detail as well. So you'll get a lot more information then. So if you want to know the hourly energy price shaping factor for the day ahead or real time for any given day, you can look on Oasis. That report will be there. It's an annual report. Actually, no, take that back. It's a daily report, and you'll be able to take a look at that on Oasis. Any questions? Michelle.
Once again, ladies and gentlemen, if you'd like to ask a question via phone, please press #2 on your telephone keypad to enter the question queue. And I do see questions in queue. Caller, your line is unmuted. You may ask your question.
Hi, this is Travis from Mercuria. Apologies if you've covered this, but what day are you going to be using this Palo or Mid-C screen for? For example, for tomorrow, I don't think that index will have been published by the time the day ahead closes. Could you kind of expand on how that works?
Yeah, hi, this is Katie Wickler with ISO. I can take that question. So for the day ahead and the real-time calculations, because of the timing that those calculations need to occur and, considering the timing of when the bilateral market prices close, the idea is for the real-time calculation, we're performing that the evening prior to the trade date. We'll be using the settled prices from that day. So those days prices are trading for, the next trade date, next day prices, right? For the day-ahead calculation, we're planning on taking prices from the Intercontinental Exchange between 8 and 9 a.m. in the morning, and those prices will be used as sort of an incremental update and sort of flow into the calculation for the day ahead. We'll be trying to sort of capture the most up-to-date prices that are trading for those two bilateral hubs.
So it'll be the weighted average of the prices between 8 and 9 Pacific for the next day to set the day ahead.
Yeah, that's correct.
Okay, thanks.
Sure.
All right. And we are moving to our next question in queue. Caller, your line is unmuted. You may ask your question.
This is Colby with Traffic Bureau. I've got a quick question. I'm trying to understand, in phase one, it suggests that anti-resources, non-participating load, virtual bid supply demand can bid up to 2,000 per megawatt hour with no justification required. And I'm trying to, going back through the slides here, it looks like imports, there has to be a justification with respect to over 1,000?
Right. Well, we're going to look at the maximum import bid price. Yes.
Okay,
that's the enhancement that we're adding for the phase two. Yeah.
So currently in phase one, you can bid up to 2,000 without the justification, but you're saying in phase two you're moving to where there has to be a justification for an import bid over 1,000.
Yeah.
Am I getting?
Katie, do you want to expand on that? I believe that's so. Yeah.
Yeah, that's correct.
Okay, so we're taking a step backwards. Okay, so then the other question that I have is, in real time, other than, so can an export bid then move the cap from 1,000 to 2,000 if there's a real-time export bid related to demand outside of California needing to buy power from California? Or would the bid just be rejected and essentially would not be able to buy power even though there's a higher price market outside of California?
Yeah, that's a good question. Let's clarify this point here. So under our phase two implementation, there's sort of two conditions by which we can effectively raise the cap from 1,000 to 2,000. And I'm looking back on the slides to see, I think that's slide 18 if you're following along. So the two conditions really would be, we have this maximum import bid price that we're calculating. So if the maximum import bid price exceeds $1,000 for at least 1 hour, or we've accepted a cost-verified bid above $1,000 for any hour, that's sort of when the conditions are going to change to raise that cap from 1,000 to 2,000. If neither of those conditions have occurred, the cap is going to be sitting at 1,000.
Okay, so this is maximum import bid price. What about for exports? Can an export affect this cap from 1,000 to 2,000 or not at all? Because this concerns me with utilities outside of California that might, when you've got power in California that is capped at 1,000 and there's a need for power just like this past summer at $1,500 and $2,000 outside of California, it looks like they won't be able to move power out of California because of this bid cap.
Right. So the term we're calling this the maximum import bid price. This is really a new calculated parameter that we're proposing that we're going to be implementing as sort of one part of this sort of screen. If this calculated parameter, the maximum import bid price, exceeds 1,000, or we've accepted a cost verified bid above 1,000, that would open the door for exports above $1,000 if one of those conditions are met, essentially.
So curious on two other things. Sorry to monopolize time here, but will California look at actually benchmarking the real-time or a real-time hours based on real-time prices and not day-ahead prices? Because I think that there's a disconnect, and I think California knows this, that what happens a day ahead isn't necessarily what happens in real time. And so I know that you have scalars, and those scalars are probably arbitrary, but I'm curious on whether or not there is a need to have triggers within real time that actually allow that bid cap to move from 1,000 to 2,000 based on, true demand outside of California. And I'm curious if California would assess that. And then also, how do you cost verify a bid for export for load outside of California? Have y'all outlined how a control area or a balancing authority would be able to cost verify a bid at the intertie to export power above 1,000 in real time?
I can take the first question. This is Danielle Table from the Policy Department at the CAISO. I would say we would consider taking a look at that initiative. I would encourage you to submit a catalog request. It's on our stakeholder webpage, and we can take a look more closely at analyzing that issue in a policy initiative.
So for the summer, what we really need to understand is what would a cost verified bid look like with respect to an export from California when the current cap is at 1,000 and there's need outside of California at something greater than 1,000. So has California crossed that bridge and put something in place so that load serving entities outside of California could cost verify export bids?
Hey, this is Katie Wickler. I can speak to the question of, cost verification. So currently with the construct we have, there's not really a mechanism to sort of cost verify an export bid. And the way that we've defined a cost verified bid in this context is essentially, a resource-specific resource, i.e. a generating resource that is submitted to us, what we call a reference level change request, to sort of show their costs are indeed truly above 1,000. And so there's sort of two avenues by which the resource-specific resource can do that. As Cindy mentioned, the manual reference level request or the automated request. But, the generating resources are really kind of what we use as our mechanism for cost verification.
Okay, thank you. I just want to voice the concern associated with that is that load drives, the demand. So we obviously need to look at both sides of the equation to determine what the cap should look like. But hopefully we can cross that in another phase.
All right. Once again, ladies and gentlemen, if you would like to ask a question via the phone, please press #2 on your telephone keypad to enter the question queue. Once again, #2 will enter you into the question queue. All right. I do not see any additional questions in queue at this time.
Okay, well, we have a bunch of questions in our chat. First, before we want to get off of this slide, I want to reiterate that the routine conditions between the first and second bullet is an and. So it's the import bid price has not exceeded $1,000 for any hour, and no cost verified bids greater than $1,000 for any hour. And for the high price conditions, it should be an or. The ISO calculated maximum bid price has exceeded $1,000 for at least 1 hour, or there is at least one cost verified bid greater than $1,000. I saw there was some clarification that somebody asked for. But now I'm going to go back and, Katie, I'm probably going to be asking you these questions from our chat. First one, will the ISO consider posting the day-ahead SMEC components hourly and both averages separately to OASIS?
Yeah, sure. This is Katie Wickler. I can take that question. At this time, we're not considering posting those components to OASIS. As Cindy mentioned, we do plan to post the hourly shaping factor to our OASIS in a new report, so that'll be available. And the day-ahead SMEC prices are available to participants currently on OASIS.
Okay, thank you. And then there was a comment that hour ending 6 is an off-peak hour. Did we have that incorrect on our slide?
Yeah, we realized.
Okay.
Yeah, that's a typo on our part. The on-peak hours should be 7 through 22, and Cindy, I think we could hopefully edit the slides and repost those to reflect that correction.
Absolutely. We will edit the slides and repost them. Okay, it looks like on-peak hours are incorrect. Okay, we captured that. The next question, at what specific time are the hub prices captured? Please post the methodology/process that will be used.
Sure, yeah, and I think I spoke to this a little bit earlier, but for the day ahead prices, we'll be taking those between 8 and 9 a.m. that'll be used in the day ahead calculation. I expect we'll have some guidance in forthcoming edits to our market instruments BPM that should detail that as well.
Okay, thank you. Next question, are the averages weighted by volume, or is it a simple average of the on-peak, off-peak hourly prices?
Yeah, that's a good question. It's the simple average.
Okay. And let's see the next one. Jim, okay. And the next question after that, ISO just replied it will be weighted average between 8 and 9 a.m. to set the index, i.e., what is the sample interval? Is it necessary that market participants know the explicit, it is necessary that market participants know the explicit details of the process. So.
Sure, yeah, I'm not quite sure what's meant by sample interval, but that's the time frame that we've committed to upload those prices for the day ahead calculation.
Okay. The next question is, can you tell us what shaping factor will be used for the first high price day this summer? The last day over $200, I think, is during this past winter event and not last summer. You won't be using that February winter shape, will you? Now, I know that there is a number of rules in place, and let's see. And I have them written here. So it says, if there is no day-ahead system marginal cost of energy greater than $2,000 within the current year's summer season, look back to current year -1 summer season, and look back from the end of that summer season. So before April 1, if we're going to look back to October 31st of last year. So that would be the end of that summer season. So I hope that answers your question. And then there is a couple questions that others might not see. What time of day will the OASIS report be posted? Do you have an answer for that one?
Yeah, that's a good question. I'm not quite sure of the timing at this point. We can take that back internally and make sure we get the correct answer on that one.
Okay. Next question, is the ISO constantly checking the weighted average during the time of 8 o'clock to 9 o'clock? What happens if the ISO grabs the average at 8 and it's $500?
Yeah,
but then at 9, it's $1,000.
Right. Yeah. So the time frame that we've committed to for the day ahead calculation is, between 8 and 9 a.m. That's when we'll be taking the prices, and that's kind of that's the details that we can share about that process.
Okay. Let's see. Next, if prices were to sustain above $1,000, does the $1,000 NGR bid cap mean that storage would be unable to charge?
Yeah, that's a good question. I think we'll have to take that one back to think about sort of the nuances between the caps and the charging or relative discharging of NGRs. We can take that one back internally.
Okay. I'm writing it out here a little bit. All right. And then the I was going to say the last question that I have, but I have another question. If a specific resource is lowered to the lower of $1,000 or DEB, when the bid is over $1,000, could the bid be raised if the price is above $1,000 and lower than the DEB?
Right. Yeah. So two pieces there. To the first part of that, if the DEB for the resource is lower than $1,000, the resource still does have the ability to bid up to the $1,000 soft cap. To the second piece of the question, could the bid be raised if the price is above $1,000 and lower than the DEB? I think I'm having a bit of trouble understanding the question there, but let me chew on that and get an answer back to that one.
Okay. Next comment. Any reason why the ISO won't just take the ICE weighted average price at 8:59 a.m.?
Yeah, so as we mentioned, we take the ICE weighted average price between 8 and 9 a.m. That's sort of the time frame that we have that meets the timeline and the sort of constraints that we have internally for our calculations prior to the day-ahead market.
Okay. Next question. What prohibits the ISO from sharing the explicit details on determining the index and releasing the written process being used?
Sure. Yeah, Dave, I think if for further questions about this, I'd like to defer this back internally. We can take this back and have a discussion about that.
Okay. And then finally, we would not raise bid cap nor bid to cap nor to DEB. That is strategy. All right. Thank you. There is one final question, and then I'm going to continue on so we can make sure we get this done. So during the time of 8 a.m. to 9 a.m., is it just one snapshot or multiple snapshots?
Yeah, it would be one snapshot of the prices between 8 and 9 a.m.
All right. Thank you, Katie. And I'm going to go forward here to our next section, which is the penalty prices. I am stuck here. It should work now. Okay. For some reason, my screen is stuck, so I'm going to stop sharing for just a moment. And actually, even my mouse is gone. Great.
And we have a question on the line. Maybe we can take that while.
Okay. Sure.
All right. Oh, the question, actually the caller must have had his question answered because I don't see them on the phone. But as a reminder, ladies and gentlemen, pressing #2 on your telephone keypad will enter you into the verbal question queue.
Cindy, I think some folks are having trouble hearing. Are we waiting until we resolve these technical issues?
I am too. I also cannot hear, so I don't know if I need to dial in again.
I can hear you coming in clear. Maybe we can get.
I can't hear anything on. Okay, I cannot hear anything on the other side though. I can hear you, Kevin.
So we are still connected. It looks like the audio is still up. So
okay, and I can hear you. All right, can you start? Can I hand the presenter rights back over to you?
Absolutely. Stand by one moment.
Oh, okay.
All right. I can give you presenting rights so you can advance, or I'll be happy to do it for you.
Well, let's see if it works if I do it. I think I'm going to have you do it.
I've just given you presenting rights.
Oh, okay. Nope. You're going to have to do it.
No problem. Just let me know what slide we are on, and I will do that for you.
We are on slide. We were just getting to slide 32.
I think 33 is penalty pricing.
Yeah, 33.
All right. Let me get there for you. All right. And let's just say next slide. And thank you, ladies and gentlemen, for your patience.
Okay, I'm not seeing the next slides, so I'll just have to do it from my presentation here. All right, so we're going to go to the penalty price section of the presentation. I'm sorry for the delay. All right, now I can see it. All right, the ISO proposes to set the power balance penalty price used by the market to $2,000 and scale related price parameters accordingly when either of the following conditions occur. Cost-verified energy bid submitted from a resource-specific resource over $1,000, or the ISO calculated maximum import bid price is over $1,000. Under routine conditions, the power balance penalty price will remain at $1,000, and all other constraint penalty prices will remain scaled to $1,000. Can you go to the next slide? Thank you. Penalty parameter details for the day ahead in real time. For the day ahead, bid cap will be increased to $2,000 and penalty prices scaled based on the new cap all day when specified criteria occur. And if 1 hour qualifies, it's applicable for all hours, so that's day ahead. In real time, the bid cap will be increased to $2,000 and penalty prices will be scaled based on the new cap for the following applicable times. If set for the day-ahead market, all hours in real time would apply, but if it doesn't happen in the day ahead but shows up in real time, then the cap applies for all intervals of overlapping real-time market horizons, and it has stepped threshold for pricing, and the next slide will tell us more about that. So let's go to the next slide. So this threshold is for real time only. It's based on the size of the infeasibility, and it's meant to scale pricing for various size of shortage. The threshold utilizes the reliability standard of the BAAL low limit to define the threshold value for each balancing authority in the EIM. If first segment shortage, greater than 0 but less than the threshold, The price it will be set to the higher of the soft cap, or $1,000 per megawatt hour, the soft cap of $1,000 per megawatt hour, or the highest submitted bid. The second segment shortage, greater than the threshold, will have the $2,000 per megawatt hour price cap. Let's head to the next slide. The next slide shows a new OASIS report that we're going to have, and this is the annual static constraint threshold values for the ISO and all of the DAAs. So you see the effective date, start date, and end date is for an entire year, actually. And it shows each BAA and the constraint relaxation threshold. So you'll find that on OASIS. We're going to stop for questions now. Can we go to the next slide? Thank you. And we'll open it up for questions.
All right, ladies and gentlemen, once again, if you would like to ask a question via phone, please press #2 on your telephone keypad to enter you into the question queue. And we do have a question on the phone. Caller, your line is unmuted. You may ask your question.
Yeah, hi. I just wanted to see if you could just recap again how the MIBP will be calculated in real time. Day ahead's pretty straightforward, but if you could just go through again how it's calculated.
Katie?
Yeah, sure. Just so I understand your question, are you hoping to just sort of get a recap of how the calculation works? Or is there any specific to the calculation?
Yeah, just how long the calculation, how it's calculated, and remind is once it's calculated and say a certain hour hits the threshold, does that then apply for the balance of the real time, or is it only specific to the hour?
Right. Okay. Yeah, that's a good question. So I won't go through the whole calculation again that Cindy presented. That may take a little bit of time. But essentially, to recap, the max import bid price calculation takes into account two sort of distinct pieces, one of which is what we're calling the electric hub prices. So that's either the maximum of the Mid-Columbia or the Palo Verde day-ahead bilateral electric price. So we would take the maximum of either of those hubs for the peak or the off-peak period, and that's multiplied by what we're calling the hourly shaping factor. And you can
you don't have to go into all that. I guess are you still going to be using that same calculation and apply it to real time, or in using the day ahead index? Is it that simple?
Oh, gotcha. Sorry, I misunderstood your question. Yes, that's the same calculation that will be applied for the day ahead and the real time calculation of the maximum import bid price.
Okay. And then once it's calculated, then does it apply for the balance of the real time then?
Right. So, yeah, we get into some nuances here. So for the day-ahead calculation, and I think, Cindy, we may have an example of that at some point. And I would also point you to the external BRS. We do go through a couple of those examples as well. But, just to sort of briefly recap here, say we calculate the maximum import bid price in the day-ahead that exceeds $1,000 for one specific hour. Now, in the day-ahead, we would be raising the cap for that one specific hour as well as that corresponding hour in the real time. For the real-time maximum import bid price calculation, say there was another hour where that calculation exceeded $1,000, say that was, hour 18, that hour would be, in the real time, would have the cap raised, just specifically to the real time. So I guess a more holistic way of saying that is that any hours that, the cap is raised in the day ahead is also sort of applied to the real time, and the real time may have incremental hours in which the cap is raised, depending on, either the calculation of the maximum import bid price or the acceptance of a cost verified bid above $1,000.
Okay, because I would assume that calculation would be if the day ahead, let's say, cleared at 200, but then in real time, a unit tripped off and all of a sudden the real-time prices went to 2,000, how would you accurately reflect the real-time price that would around 2,000? What index would you then use if the day-ahead price was essentially a stale price? Historicals then? Would that pattern?
Right. Yeah, I think I may have misunderstood the last part of your question. I think, generally the calculations that sort of trigger the bid cap being raised to 2,000 for those hours and day ahead will apply in the day ahead as well as the real time. If there's sort of incremental, shifts or changes in the market dynamics between when the day ahead closes and when, we run the real time, for the real time calculations, that would be reflected in the real time hours.
Okay, thank you.
All right, as a reminder, ladies and gentlemen, #2 will get you into the verbal question queue. #2 if you would like to ask a question via phone. All right, I don't see any additional questions in the queue at this time.
Okay. Can you go back to slide 36 for a second, because there's a question in the chat. Slide 36 should be cleared bid or not submitted bid. Let's see, where are we looking at that? Okay, so the question is on this first segment, price set to the higher of the soft cap of $1,000 per megawatt hour or the highest submitted bid. Can we confirm that it's submitted bid or should it be cleared bid?
Yeah, this is Katie Wickler. That should be cleared bid. So we would be setting it to the higher of the soft cap of 1,000 or the highest cleared bid.
All right, thank you. All right, and again, we will be updating the presentation. So the next question regarding penalty prices. So the penalty price moves up to $2,000 for the entire day when one of 3 thresholds is met, but the day-ahead and real-time offer caps only change for a few given hours. As such, are there hours where the penalty price is $2,000, but the energy soft cap is only $1,000, correct?
Yes, that's correct.
Okay, thank you. Let's see. There was a question from the beginning of the presentation. The cap price changed from $5,000 to $1,000. I'm not sure what that's referring to, but the cap, but I don't think we had anything that was $5,000, so ever. The next question, what does overlapping real-time market horizons mean in the context of penalty calculations when the threshold is crossed not in day ahead, but shows up in real time? Can you explain stepped threshold a little more, please? So, Katie or Danielle?
Yeah, this is Katie. I can take that one. So I think I would refer, Salim, I would refer you to the external GRS. We've put together some fairly in-depth examples that sort of go into that situation. I'll stop there because I don't want to get into concepts that are a little bit outside of my area of expertise. So we can take the question back internally as well.
Okay. Next question. In the MIBP example, there are only hour 19 and 20. Does that mean the price is calculated daily and will only display a notification of new bid cap when the penalty price is over $1,000 the day before?
So yes, the maximum import bid price is calculated daily for the day ahead and the real-time market separately. There will be a notification that we'll provide to participants to sort of notify of when the cap is changing from 1,000 to 2,000. And we're not planning on getting into too many specifics on that right now. I expect we'll be able to provide some more clarity and some more guidance on that notification in our subsequent market simulation training.
All right. All right. Next question. If we can go back to the prior section real quick, but what happens if there isn't any trades that take place at mid-C or PV during that 8 to 9 o'clock time frame? How does the ISO do the calculation then?
Right, that's a good question. So I think if we didn't see any trades at either of those hubs during that time, we would just use the most recently available price. All of the trades up until that point, essentially.
All right. Okay, we have a question in the queue. Let's take that phone call, and then we'll move on.
All right, caller, your line is unmuted. You may ask your question.
Hi, it's Callie Wells with WPTF again. Quick question. Do you guys know if the BPMs, the draft BPMs for this policy have been posted yet, or if they haven't, when those are expected to be out?
Hey, Callie, this is Katie. We're expecting to post those in pretty short order. We'll have some edits to the market operations and the market instruments BPMs, and so those edits will be available shortly for participants, and we'll post those sort of in our typical PRR process.
Okay, because I know sometimes on complicated policies like this, you'll kind of extend the comment period just so people have more time to digest and think through the draft language. If there's any possibility of doing that with this project, that would be greatly appreciated. There's a lot of moving details here that I think we could use some more time to digest in the BPM.
Sure, understood. Yeah, we can take that back. All right, thanks.
Oh, all right. It looks like, got a few more questions here. Let's see, how are we doing on time? Okay. Going back to the verifying the real-time MIBPs again, consider the following example. In day ahead, the MIBP is $200. In real time, a unit trips and real-time prices are $1,500. How would you verify an MIBP for real time?
Yeah, hey, this is Katie Wickler, just digesting this question a little bit. I assume you meant that the maximum imported price was $2,000.
Yeah.
Yeah, let's see. Yeah, Ian, let me take that one back and just think about it a little bit more. I don't want to give you an answer on the fly that's incorrect. Thanks.
All right, so moving on to the next one. If day ahead only has a $1,000 bid cap because the index did not trigger a higher cap and real-time conditions changed such that the real-time bilateral market is over $1,000, will the real-time bid cap be stuck at $1,000? The real-time bid cap will be stuck at $1,000, right?
Yeah, let me take a sec here. Right. So, once we calculate the real-time maximum import bid price, we'll be taking into account the conditions that have materialized at the time of the calculation. So, if the real-time bilateral market is showing prices that are high, that would, put the maximum import bid price for the real-time above 1,000, we would reflect that if that's available by the time we perform that calculation.
All right. And next, what happens if the bid and offer have moved significantly away from the WAP, i.e. WAP is $50, but the market has moved but not traded and is no at $200, not at the $200 range.
Yeah, sorry, Cindy, let me just go back quickly and clarify what I said. I think there may be some confusion. So there is no real-time bilateral index. I just want to clarify that. I may have misspoke. So, you know, for the day-ahead calculation, we're going to be taking the prices that are trading, you know, on the day that we run the day-ahead market. They'll be trading for the next trading day. For the real-time calculation, we'll be taking the prices that have traded throughout the day and have settled for the next trading day. So, you know, it's the next day bilateral indices that we're taking for each of the calculations. There's just kind of a nuance of when those prices are being pulled in for the calculation. I hope that helps clarify.
All right. Let's see here. There's no bilateral index. I think we covered that. How would you verify that the real-time bilateral market is above $1,000? Did you just answer that?
Yeah, you know, we're not, I don't think there is a real-time bilateral market. So, you know, we're not going to be using, we'll be using the next day bilateral prices for the calculations.
All right. So let's see, I'm just going to take a few more here. We've got lots of questions. I've got to finish up. Duck using, I'm sorry?
Cindy, hey, so there's also the consideration that, you know, if there's a CAISO, like CAISO BAA resource-specific resource that has a cost-verified bid above $1,000 in real time, then the bid cap also increases in the real time. You know, we can't be constantly looking at the external bilateral prices and pulling that into our systems, but we do have our own information, you know, based on the bids that are being submitted and cleared. So there is that consideration as well.
Okay. I'm going to skip down on the comments because everybody can read the comments and just go to the last two questions. What is going into the calculation to verify that in real time? What price or price methodology is being used to verify?
Yeah, just reading through this here, I'm not sure I'm understanding the question here.
Okay. All right. Could the ISO consider having the MIBP trigger for something like super peak hours instead of individual hours to help with price convergence and market stability? So in this case, the policy, I mean, I suppose this could be considered for future, but currently we're training on the policy that we're implementing on 6/15, so we could probably take that back. Also, then the final one is, will declaration of an EEA automatically allow offering at the interties at $2,000? I'm sorry, I'm not sure what an EEA is, but Katie or someone?
Yeah, this is Danielle. The alert operator warning. And with this policy, no, but I think it would be something to consider as an enhancement in the future, so we can take that back.
All right. Okay. I think at this point we're going to continue on. We just have a few slides left. So if you can, Michelle, advance it to the next slide after that. So as I mentioned, there will be another training coming up that's specifically going to go over scenarios and market simulation for the market simulation. So I'm not going to go over what the structured scenarios are now because they're going to be reviewed in that training, but there is a link available for them. The market sim is scheduled to start on May 25th. So that's something to look forward to. So let's go on to the next slide. Just to summarize, the FERC Order 831 Enhancement Project implements the various sets of market penalty parameters that will be effective depending on market conditions, and implements price screening methodology for virtual bids, demand bids, and non-resource specific system resource bids that are more than $1,000 per megawatt hour. Scheduled to go into effect on June 15th of this year. And you can advance to the next slide. If there are any final questions, now is the time. And Radha, if you could put that note down in the chat, that would be great. Final questions, Michelle.
Ladies and gentlemen, if you'd like to ask a question via phone, please press #2 on your telephone keypad to enter the question queue. Once again, pressing #2 will enter you into the queue. All right. I do not currently see any questions in the phone queue.
All right, thank you. Can you advance it just to the next slide? And I want to thank everyone for participating in today's session. Please take a moment to fill out our course evaluation. And again, we'll be taking some of your questions back, and we'll get back to you with some responses. If you have any particular questions, you can send an email to customerreadiness@caiso.com if you didn't get a chance to ask them here. And thank you again for participating.
That concludes our conference. Thank you for using Event Services. You may now disconnect.